All right, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for July 29th, 2020. Let's just go ahead and jump into it. So, yesterday I made the extended argument for the trade to the downside. We were looking at this. Price action yesterday that closed poorly inside Monday's space, and it gave us basically a down day. And so we were templating, the contingencies for what happens if that broke through the 10-day low, then that would lead to a retest of the Bollinger Band mean. Then after that one, we examined, well, what would happen if we got an upward move? And I thought that was less likely, but we templated that. And so that's essentially what we got today. We got a 1.5 worth of movement, and so now we can take a look at what happens tomorrow if we get that size of a move. So if it opens where it closed, without a gap, this is what tomorrow's price action would look like if it was a clone of today in either direction. And as I said yesterday, the purpose of the framing is to help me identify whatever my directional bias is going into the day, and then by examining it clearly in both directions systematically, I can leave the analysis with no directional bias, but just an awareness of the probabilities or possibilities if it goes in either direction. And then I am free to follow price. I don't have to compete with beliefs about what it may or may not do. I can just be free to trade price action. And all of the scaffolding and architecture allows me to identify key price levels where decisions seem like they're being made in the market, and then I can react to those things. All right. So that's going to be the same thing today. I'm starting with a belief in the upside move. So if I'm going to be true to form, I believe the 2-day move looks like from a low of yesterday to a high of today looks like this, and so I naturally want to think that this can get up to Z2 tomorrow. So that's a pretty good indicator we ought to be paying attention to the downside, right? So we'll do that. I'm going to start with the directional bias that I have, which is grinding to the upside. We said that the downside move could easily become a panic sell-off, but that the upside move, to the 10-day and 30-day high at 327.25 would more likely be a grind. And so today was the first grinding day up. We had a slight gap up opening, and the opening was also the low of the day. And the good news is that the PSAR held today. The PSAR from yesterday held very well, and today's PSAR held well. And so tomorrow's PSAR will probably be here at the tip of this arrow. If we projected it one more, it would be about 321.50. Tomorrow's 10-day low is going to move up slightly to about 319.5 as the 10-day low drops off. Then the new 10-day low is going to be here. And so as we start thinking about the 10-day range, we had an enter here. We had a low of the 10 period. It moved directly to a 10-day high. That's where the 10-day high and 30-day high both are. Then that sell-off down to the 10-day low, the current working 10-day low. And now we've got the residual move is like this. So that feels like an up because if anything, we would say, hey, this 10-day low and then the next 10-day, this is slightly better. So we'll take that. But we also notice that the slope of the dragon has been positive. It has flowed from the vicinity 10-day low, and now price is closed above the north skin of the dragon at 324.22. So I'll take that as a favorable sign that the slope of the dragon still continues to be up. The slope of the PSAR ladder is still strong. And now there's this much protection, if you were that much slack, just from 325 to so about a $5, about 1.5%, which is slightly more than an ATR. So there's some protection built in. And then the thing to really notice is how steeply good the RL30 has now become. When we take that projection, here's that slope, and that's stronger than the dragon and stronger than the PSAR. And so the RL30 is really in pretty good shape here. Let's track that through time. The RL30 comes in, stalls a little bit here, and then it never even gets negative. This price action in here has triggered a steeply upward slope, and that's very good. So when the RL30, if we were just going to draw that as a straight line from here all the way up to that RL30 extension, that looks good. At the same time, you'll notice that the RL10 actually had a rollover here. And across the baby dragon, came down here, and now today reversed and crossing up. So that's actually a good thing. The RL10 now has a second wind, and that feels pretty good. Yeah, so we had the RL10 cross the baby dragon, and then 4 days later recross the baby dragon here, and is sloping up. Now we'll notice that the RL10, that 10-period regression line, is now ever so slightly favorable. So this is really, today was a good news day. The large cap tech guys weathered their storm at the in front of Congress today, and price action netted out to be pretty good. So if this were to continue, we'd have to see price get through the high of the day at 325.72. It would have to get through the RL10 peak, which happened about 6 days ago, the RL10 peak at 326.63. Then the combined 10-day and 30-day high at 327.25. And that's all possible. If we just get the same kind of action tomorrow that we got today, it would look like this. It would make a new 10-day high and get most of the way to the Z2, which is 329.53, and then 330 even is within range. The only negative about any of this stuff is that the RL90, which has been long and strong, has just started to stall. It peaked right here at 331.47, and today came down ever so slightly. But we get a few more days like this, then and that RL30 keeps going up. That's eventually going to make this RL90 flatten out and then resume to the upside. That would be a very favorable indicator. So that's the upside, the fact that tech was able to survive today. Let's take a look at the downside trade now. If it were to open from where it closed at 325.11, on the way down we see the peak. That's peak RL270 fair value from way back in the day before this virus. 324.84 was the peak of that RL270 fair value, and we're there right now. So that's the first one. Then we have the peak of the dragon at 324.22. The RL10 price itself at 323.58. Spine of the dragon, Z1, and the bottom skin of the dragon and the low of the day. I'm going to take all of that as one price at about 322.50. I think that's got to hold to really feel confident about the upside. We really want to see that hold. If that were to fail, the next support level is the PSAR, and that's got to be solid at 320.70 to preserve this nice 3-day upward move. So the PSAR's got to be strong at 320.70. Then it's the 10-day low at 318.89, and I'm going to call it 319 even when we realize that this 10-day low is going to jump up to this spot here. If the 10-day low doesn't hold, bad news. Then it's the next stop is the Bollinger Band mean at 315.65, and then it's Katie bar the door down to Z-1 at 308.68. So cautiously optimistic about this. About this entire project. This is a market that pretty much feels like from this strong basing area, nice strong move up, a moderate move down, and then on net, a pretty strong resumption. So now all we got to do is see that get through. Again, just got to get through this little bit of resistance to make this become like that. So the 10-day high, 30-day high now at 327.25 becomes really important resistance. We really want to see it get through there. So those are the measured moves. So any breakout above the high of the day, I want to really get long inside here because my expectation is if it can get above 330, then it's off to the races. Okay. So all that feels pretty good. Let's see what worked today. All right, so the S&P had a very good day at plus 1.23. Let's see where the other peers were. We had diamonds here at up 0.6. And looking for IWM. And there's IWM there up at 2.2. So again, the S&P locked into the middle. The big fat large caps lagging a little bit, and then the more speculative index players there and the traders with the Russell 2000 at 2.2, basically twice the strength of the Dow, or twice the strength of the S&P. All right, what worked to the upside? Let's look at our sectors. There's technology at 1.45. finance 1.87, energy 2.1, oil exploration at 3.3. So those were the strong sectors. The weak sectors, clean energy, Mexico, treasuries slightly into the red, and I'm sorry. There's basic materials. There's healthcare, consumer discretionary. So I would say the bigger losers today was that clean energy, treasuries, Mexico. Silver and silver wheaten gave up some here at about 0.88 and minus 1.3 respectively. Big losers today, Intel, Virgin Galactic, and Nikola. So Intel was on my watch list. I was watching that key level. We're going to see the short trade on that one here in a little bit. I'm still positive on Wheaton and precious metals altogether. We'll see how that goes. Things that worked to the upside really well today. The energy sector. So you get Devon at 4.8, the double energy sector at 4.3. The triple tech was at 4% and 3.5% respectively. That oil exploration was very good today. And then materials. There's Cliff and U.S. Steel at 2.6 and 2.8 respectively. Alcoa did good at 2%. Our tech leaders today, compared to the S&P, there's Google, there's Twitter, and Tesla, and Apple, and Nvidia. I bought some more of them today. So tech and energy, and I will say to a certain extent, the metals did pretty good. So that's what worked today. Quick look at some markups now. So now we're looking at the S&P weekly. So this little step is still working. If it gets above that Z1, that's going to be a really favorable move. So I would like that. And if it can get through there, the next price level that matters, it's going to be basically the hump of the dragon over here. Yeah. That's if it breaks above there, then the entire sell-off is then negated, which would be this move. This move down. Followed by this move up. And again, we're noticing that it takes 3 to 4 times longer for the grind to reverse and work its way up. And then I just want you to notice that the stronger move up was that first leg. Then it kind of got sideways, and then now the second leg up. So reinforces that whole notion that what you really want is finding those turning points. And I want you to notice how good the signal on the weekly of the RL10 crossing the baby dragon on a weekly basis really does a nice job of saying, yep, we should be long by this time. I think the daily and the daily PSAR flips are better because you notice the PSAR flip doesn't happen till all the way over here. But we're real close now to this, and now the Bollinger Band mean back here just has my attention at the key price level of 300. So I think we have a trading range in here still. In this area. And I really want to see it get above, I'll call it 330. And then anything below that 300 would be disastrous. Okay. Treasuries gave back just a fraction today. I still feel like this whole move is one good news story. And now the question really is there a lid on this thing? Here's where I think that would be somewhere around 172. And I'm really looking to see if it can get above, break out of this box right about there. If that works, then the next move is up here, up to 180. If I'm long treasuries now, which I am, it looks to me like the edge of the dragon is support. This would be starting to worry me a little bit in here. And then if that fails, looks more like that. Puts all of that at risk. So this whole week, this whole week feels like a test case to me. So we'll be watching this in here with great interest. What happens inside this tight little compressed doji for the treasuries, because that's going to be sort of a the opposite proxy of the equity market. Brazil is an example of something that has a lot more room to go. So I look at this last little move here as being pretty favorable. Here was a sell-off. It's now recovered from that. If it can break out, then the next opportunity space is this one. We call that basically all the way up to Z1. And then the next one would be the next region to conquer. It looks like that. So again, if I'm long Brazil, then I think I would probably be using the bottom of the dragon as my support space. But if the bottom of the dragon fails, I think then it's a test down to the PSAR. Yeah. And if that fails, it's Katie barred the door all the way back here. So I'm happy with Brazil right now. But I would almost want to protect that, and certainly this, as two possible support levels. And then, as you can see, the getting long in here is certainly reasonable, because that's just breaking out. That's the entry to the new price level up here, and then here's the gap that it's got to fill. So it gets through between those two lines pretty quick. It should run to 35 pretty quickly if it can break out. Yeah, so that move to from 34 to about 35 and a half, that would go pretty quick because there's no resistance in there. That's just closing a gap. And then you'll notice that there's a very strong price level right here. That's where the collapse occurred. So 39 would be a serious test because everybody would have gotten their money back. So what I'm looking at on that is these two very long volume bars. That indicates that those two price levels at 39 and say 35 are very significant technical price levels as round numbers. But the good news in Brazil is, you've really got from 33 and a half all the way up to 44. That's another 30% reasonable gains up to the long-term fair value. So that's a 30% gain still available. And then if you're using either one of these, if you're not in the position yet, using either one of these two support levels still gives you a very favorable reward to risk ratio with this as your target. I think they have the same problem we do, and that is defeating that doggone virus. Now, the tech leaders have been so strong, as you can tell now, that here was the previous hump of the dragon. So that means everything above that line is better than it was before. So that's the outsized gains. So if we said something like, the sell-off period was here, the recovery period was this, to get back to parity. Now this is where the real support or the real gains are taken off. So I kind of like what I'm seeing in tech here as a support level, at Z1 or the spine of the dragon, if you will. And certainly the base of the dragon. C1 is also last week's low. So if those two hold, this thing should be pretty good. And now it's going to it'll get above here. It has to get above, let's call that the RL10 peak. Yeah, so XLK's got to get above 108. I wouldn't be surprised to see that happen this week. Then 110 is in range. If I was just playing that for now, if I saw some strength tomorrow, I could even argue for a tight tactical trade using just the weekly low from yesterday as the support level. Because if this is going to work, it should just work right from here, because the tech leaders survived contact with Congress already, so that's up and away. XLK. So that gives us, from on a weekly basis, 4 significantly different asset classes to consider. One of them is the S&P, which is ready to break through to the upside. Treasuries, which are going to be challenged to hold on to their gains. Brazil is much more of a latecomer. It's only gotten through its first wave of success. There's still a lot more room in this yellow zone for it to make gains. And then the excess gains from technology, which have already recovered completely their gains. So if I was going to put that into I would say probably XLK, is at the top of the stack. EWZ is at the bottom of the stack. And then you could take your pick between SPY versus treasuries. And that's kind of one of them's, whichever one wins, the other one's going down. So if it's the S&P goes up, led by tech, then treasuries would probably experience a sell-off as money cycles out of them and into the other winners. And then Brazil probably has to see support from SPY. So there's kind of a logic trail that looks like that in terms of those four categories. Okay. I'm going to take a quick look at some trades today that'll be continuation trades for tomorrow. So this is Intel, and you may recall Intel has been horrible. Yeah. And we've been watching this series of lower lows, and what we said was it really had to hold 49 or 49.50. So today was the big breakdown, not the only big breakdown, but a serious break. So that when it broke below yesterday's low, that was a trigger really to be ready to pile on to the downside. So that's the background for Intel. You know, the swing trade time frame setting up our intraday turbo. So this blue dotted line, or I'm sorry, this red dotted line was yesterday's low. So this is a feature of TC2000. You can just have it automatically plot those. So yesterday's low was 49.25. The blue dotted line at 49.50 was the high of the day, and that's where it opened today. So today it opened at the high of the day. 4 minutes in, it broke through the yesterday's close. There was an initial rush down, which I missed. It rebounded back to the VWAP and then started to collapse again. And then inside, like this felt like a little pocket or a continuation. I wanted to be short here. So I wanted to be short here before it broke all the way down below here. My thought was that if it broke below this, we'd see more of a sell-off. It took 2 turns before it did that, but that's what ended up. So this is the standard risk box back to the PSAR. And let me draw my the standard Wu Wei stop. Basically be this. Here it comes down to the PSAR dot, then over to the Bollinger Band mean, and riding the Bollinger Band mean down. Then this was kind of like a sniper exit. This felt like a pocket reinforcement. Instead of waiting for the collapsing dragon, which should have been over here, I got it on the RLXD, so that's a supported. It was getting ready to be winter, so supported crossing to the other side. And And then I wanted to make bank on two because I felt I got in too early on that second position and got nervous. And then it rebounded to the Bollinger Band mean and then reversed once more. So this was becoming like a supported winter crossing. This felt like a collapsing dragon from here. Standard stop at the PSAR, and then the Wu Wei goes like this, and that's basically the same. And I don't care whether you take the Bollinger Band mean and then a strike exit, or if you just take the PSAR straight down, you end up getting a really nice trade and not too much of it given back. And I was reluctant to keep getting more on that one because everything else was working today, and it just felt like that was such an anomaly that I just can't believe that Intel's in that bad a shape. Although Nvidia to the upside was up 2% today, while Intel was down 4%. So who knows? So that was an opportunistic short in Intel, and that's a continuation pattern. So again, there's three sources of ideas for tomorrow's trade. One of them is continuation patterns. Second one is going to be like the old reliables. So that's like frog champions. And then there's going to be new signals. So Intel was a poor loser today on a day when the rest of the market and all tech was up. So that puts Intel in a critical state. Now tomorrow it could get above its VWAP, and that would be people buying a pretty good company on sale, or that thing could continue to fail for reasons. And so that would lead it downward. So it's really just the market in a critical state, or in this case, Intel in a critical state. And which way is it going to go? I do not know. And I'm ready to trade that in either direction. But that's what Intel looked like for today. All right, next one up is Virgin Galactic Holdings. So yesterday, it was also down. And these two intraday shorts are sort of indicative of my pessimistic nature. All right, Virgin Galactic, come on up on the screen. Really? You got to give me a hard time. All right, hopefully that'll redraw. Meanwhile, this was a reinforcement of weakness again. So let's take a look at all right. So this dotted red line reflects yesterday's close at 23.85. The blue line at 23.75 is the open. So we had an opening here, it had an initial surge up, but the VWAP really did not follow through. So that what that says is there's not much volume that's buying in here, and then pretty quickly that thing rolled over, and I saw it as one big move down, a half-hearted rebound, and then a resumption of the downward move. And so when it rejects here at the VWAP, notice the RL10 rolling over, then I treat this as a collapsing dragon. Here's that level and like a Z2 breakdown. So I'm short from here in the usual way, and then the Wu Wei exit looks like this. Typical stop when the PSAR dot gets a couple past our entry. Then I just bring that to the PSAR, leave that in place. Until the Bollinger Band mean gets it, then this becomes a sniper. That inside that blue dot. So making bank on Virgin. Again, this is one that's I was happy just to get a piece of that because they've got a earnings announcement coming up next week. So I actually think they're going to rebound nicely from that. So this could just be tactical plays to shake people out of their positions and then trying to buy inventory. And you'll notice that there's quite a lot of buying pressure on this thing down here at all of these price levels. So this whole price level looks like this long red spike is people cashing out and then people buying that up. So I just feel like this is an accumulation of at this price level. So I'm thinking like 23 is a pretty important price level for Virgin Galactic. All right, so those are my trades today. Mostly working on the short side, and we'll see if there's any continuation in the techs. I'm going to shift kind of to the techs and the materials again because the materials actually had some gains today that were pretty good. Doggone this thing. All right, let's go to the daily report then and finish her up. All right, so you've seen the daily health check already. These are 4 clean charts on the market weekly for those four symbols it talked about. So the S&P, again, just as a quick recap, I just feel this in a really tight compression range, and if it can break above that Z1 on the weekly, then this next block is available. XLK has this. That's the tech leaders have already made that recovery up the stack after the big sell-off in tech. So this is all good. That's showing you that the tech leaders are the ones. This little anomaly to chase people out of their positions, and then This has been a steady accumulation of treasuries in anticipation of a market sell-off. And it's right back to key price levels here. And if that can break through, then 180 is in play. But I think it's SPY versus treasuries. But to me, treasuries have the advantage when if you're taking a longer term and looking at the election. Whereas this move here looks to me to be short-term opportunities, because when a new administration comes in, the Democrats are going to be looking at those large cap guys as sources of revenue and moral superiority. And then meanwhile, outside of the U.S. and not Asia and not Europe, you got Brazil, which is still trying to recover the second half of their losses. And they've had one stability move. Here's a burst, stability. Here's the second one. So if that can break, I think we said that's 39 and that's like 33. So there's 2 and 3 price stops all the way up on Brazil as opportunities. Okay. Taking a slightly longer term view. All right. Let's go with shapes, rectangles. So we're still bullish normal. We're all the way back up. Just one little day of recovery. We're almost completely overbought in every dimension. That's good. Risk Z is still favoring the long side. Not quite long in the tooth yet. It has to get above 2 to really be worried about that. Latin America is the one that if we see market weakness, ILF would be the way to go on that one. I would also look at Mexico or Brazil as a way to even more sharply focus on that. Intel, Boeing, and Goldman are the big laggards. Pfizer, Procter & Gamble, and Merck, so that may be some XLV healthcare is available. Lots of dojis today in the Dow. Quite a few 5DDs, 3 of them. So that's going to be Intel, Disney, and Johnson & Johnson. The 551Ws were the ones that really benefited today. That's buying strength on a dip. And so you'd be looking at the second day momentum. That makes Johnson & Johnson very interesting because, look, he's a doji. He's channeling. Oops. Dang it. Channeling and a 5DD and a 551W and a 2.8 to 1. Johnson & Johnson should be on your watch list. Still plenty of things to choose from in the auto framer. Lots to choose from there. ETFs, only 3 dojis, Brazil, Latin America, and oil. These are 3 that are like, if we saw weakness, you could short them like a dead cat bounces over. That would be real estate, Latin America, and Mexico. So there's some real weakness in there. Otherwise, not that much to look at on there. There's that's MDY. Gotta find a better way to trade them. Yeah, I like that the both the Russell and the U.S. mid caps were good today. Silver, gold, and Pfizer on the positive stretches. Big time negative stretches here in the techs, and I would expect Microsoft and Apple to mount a rebound here now that they've been able to get through the congressional testimony. Auto framer, Intel, Goldman, Microsoft. And then there's Johnson & Johnson on that. Has multiple signals in his favor, using $1.50 of risk. using the range risk. A number of good daily squeezes. There's consumer discretionary, Microsoft and Disney. Diamonds in pretty good shape. There's a chance to get Home Depot on a breakout. And I'm going to look for second day momentum in the metals. And there's Johnson & Johnson again. It's just everywhere you look. Trying to really suggest Johnson & Johnson, huh? So all of these things in the summer are where that new relative strength is going. And these are the ones that are lagging behind here in the fall. And I just think those, you get a chance to buy those three on sale. And then these three in the winter are the real laggards, Nike, Boeing, and Intel. As a mammal, these flashing red lights get my attention. Probably need to go look at Walmart as an opportunity. And Coke and Home Depot also. Couldn't miss today in the ETFs. Everybody was happy today. Everybody happy. And that's everything I want to cover for tonight. We'll get this posted, and I got some framing work to do, and back at it again tomorrow. So thanks so much for your kind attention, guys. Keep up the good work. I will get back into some bar by bar work later this week. I just got some other projects to attend to. But I've shown you enough examples of that you should be self-directed by now. Okay? Take good care, guys. See you tomorrow.